almost all currencies have declined in value over time. There are three major categories of investment. The first category is anything denominated in a currency. It can be bonds, it can be deposits in a bank, it can be a money market fund, it can be cash in your pocket. As a class, currency-related investments we do not think make much sense. The second category of investments regard items that you buy that don't produce anything, but that you hope someone will pay you more for later on. The classic case of that is gold. But it isn't going to do anything. It's, all you are doing when you buy that is that you're hoping that somebody else a year from now or 5 years from now will pay you more to own something that, again, can't do anything. If you take all of the gold in the world, it will be a cube that's about 67 feet on a side. The value of that cube, all the gold in the world, is now about valued at $8 trillion. And there are 1 billion acres roughly of farmland in the United States, and that's valued at something over $2 trillion. And if you take 10 Exxon Mobiles, you get up maybe another 4 trillion. So you could own all of the farmland in the United States, and you could own 10 Exxon Mobiles, and you could stick $1 trillion or so in your pocket for walking around money. And you could have your choice of that or this 67-foot piece of gold. The third category of asset is something that you value based on its what it will produce, what it will deliver. You buy a farm because you expect a certain amount of corn or soybeans or cotton or whatever it may be to come your way every year. And you decide how much you pay based on how much you think the asset itself will deliver over time. And those are the assets that appeal to me and Charlie. Now, there's some logical follow-on to that. If you buy that farm and you really think about how many bushels of corn, how many bushels of soybeans will it produce, how much do I have to pay the tenant farmer, how much do I have to pay in taxes and so on, you can make a rational calculation. Logically, you should not care whether you get a quote on that farm a day later or a week later or a month later or a year later. We feel the same way about businesses. When we buy ISCAR or we buy Lubrizol or whatever, we don't run around getting a quote on it every week and say, is it up or down or anything like that. We look to the business. We feel the same way about securities. When we buy a marketable security, we don't care if the stock exchange closes for a few years. So when we look at Berkshire, we are looking at what we think can be delivered from the productive assets that we own and how we can utilize that capital in acquiring more productive assets. I would bet on good producing businesses to outperform something that doesn't do anything over any period of time. A business or any economic asset is going to be worth what it produces in the way of cash over its lifetime. All investment is laying out some money now to get more money back in the future. Now, there's two ways of looking at getting the money back. One is from what the asset itself will produce. That's investment. One is from what somebody else will pay you for it later on, irrespective of what the asset produces, and I call that speculation. Yeah, we're not enthused about gold. People historically have felt that was the first refuge from a currency that was going to be decline in value. But so's a barrel of oil, so's an acre of land, so's a piece of Coca-Cola. If the dollar goes down 50%, we will be selling Z's candy for double the present price. We would not trade the ownership of those kind of assets for a hunk of yellow metal. Gold would be way down on my list as a store of value. It really is not a store of value. If you're worried about paper money, and I think it makes a lot of sense to worry about paper money over long periods of time, but it's just about
It's just about the last thing I would want to own under those circumstances. I'd rather have the ability to sell people a pound of candy 20 years from now, and if they're dealing in seashells, I'll get an appropriate number of seashells instead of paper money for it. I don't see gold as a store of value, and the truth is it hasn't worked very well. I see no reason, why it would work well in the future. We take it out of the ground in South Africa and we put it in the ground at Fort Knox or someplace, or in the New York Fed. And it doesn't do much along the way for anybody. The one thing I would bet my life on, essentially, is over a 50-year period, not only will Berkshire do considerably better than gold, but common stocks as a group will do better than gold, and probably farmland will do better than gold. I mean, if you own an ounce of gold now and you caress it for the next 100 years, you'll have an ounce of gold 100 years from now. If you own 100 acres of farmland, you'll also have 100 acres of farmland 100 years from now, and you'll have taken the crops for 100 years and sold them, and presumably bought more farmland with the process. It's very hard for an unproductive investment to beat productive investments over any long period of time. If you had bought gold at the time of Christ, and you figure the compound rate on it, it may be a couple tenths of 1%. I think that anytime you buy a non-productive asset, you are counting on somebody else later on to buy a non-productive asset because they think they can sell it to somebody for more money. And it's been tried with tulips, and it's been tried with various things over time, and it does come to a bad ending. In the end, you make your money out of productive assets.